The next odds enhancer is what I would describe as demand taking out supply, or supply taking out demand. So let's go to a chart and let's see what this looks like. Now, in this example, we've got supply here and we've got a demand zone here. Now, in order for this to become an odds enhancer as far as a really strong, potentially strong level of supply, what we need to happen is supply to take out this level of demand. And there's obviously two ways that it can be done. If it goes straight through like this, right, it goes straight through that demand zone, it means that there was really no demand or hardly any demand at this price, and we have a really strong level of supply, because this was really the origin of the move, and supply was so strong that it really kind of just cut through and this level of demand, there was no demand here. So this level becomes a very strong level of supply, or potentially, right? But if you get a situation like this, right, where you get a kind of, some demand here, a bit of a bounce, and then a move, this is also a level of supply, right? But this would be the strongest level of supply, right? So this is still a tradable level, nothing wrong with this level at all, but this would be the strongest level of supply. So let's look at this on a price chart. Now, we've got a move up and we've got pretty much all these demand zones here, right? And then we've got some supply zones around here. Now, always as well, keep in mind that this is the cheap level or the expensive level, depending on which currency you're buying, and vice versa. So this is really the potential range. If you're looking at this in real time, the low to the high or the high to the low is where price potentially is going to be contained, due to there being valuations. So this could be an expensive area, or this could be an expensive area or a cheap area, and vice versa. So what we have is a level of supply. Now, this is our first level of demand right here, and prices actually come down into this level of demand, and we've got two levels of supply. Now, we get this move here where we get some demand here, bit of buying, and then we break through. Now, these two areas are really the areas where we want to say, all right, then supply from these two areas took out this demand level. Yes, there was some supply here, but it's the levels above that take out this level of demand that we're interested in. It's not this level here that takes out the demand. It's this led to this led to this, right? So it's always a level or two above, not the actual supply that takes out demand, right? So what we have is prices come down into this area, this level of demand here, and then we manage to hold. Now, again, we have supply here, and it didn't hold, but then the two levels that prices came into was also the two higher levels of supply, which is here, and you can see prices kind of spiked, and then we managed to fall away. Now, again, just looking at where we are in from a value range perspective, if this is the high, this is the low, midway is fair value. So let me just bring out a tool. Right, so we've got between here and here, right, that is the range. Here, around here, you're looking at is roughly fair value. So anywhere above this level, right, if we were looking to be buyers of the Japanese yen or shorters of the pound, this would be the area we want to really try to look to trade at the best levels. And even though this would probably line up maybe with some sort of 61.8 Fibonacci level, what we're really hoping that prices really come down to where, or up to where we would consider the bargain prices, the cheapest area, the discount areas. right? So we're trying to trade at the bottoms and tops of ranges. Yes, there are opportunities to trade at fair value. Definitely, if you have an opportunity to do so, or you think that prices are still undervalued at what would be considered a fair value range. But if we're looking at from the high to the low, these are the areas, the top of the areas, and maybe the bottom of the area of the value range is where we are looking to trade, because you have really the best chance of prices reacting at these areas. And remember that really markets range more than they trend, right? Markets trend within ranging markets. Whether if you zoom out, you're pretty much always in a ranging market, right? So we're just looking for the optimum trades where we want to see trading opportunities at the tops and bottoms of potential ranges. So in this example of where demand takes out supply, it's pretty much the inverse. So you would have this level here is strong demand if prices really kind of break through this level of supply. And we know that to be true because there would be really no supply here. And if it breaks through, this is definitely an area of strong demand, and where we would want to be trading if prices come back down into this area here. And again, if we do get something like this where we get a reaction, right, this is still a level of demand because we made a higher high, and we know that this to be a higher low, and this is a level of demand where we'd be interested in definitely buying. But the original move from here would be the level definitely we would look to buy as the optimum area. That's not to say that you can't buy here, definitely, but as an odds enhancer, we want to look to this area right at the low. So let's look at an example of this on a price chart. So we've got our supply zones marked out on the chart, and then we have a level of demand, potential demand right here. So as prices come up into this level of supply, what we want to see is this level of supply get taken out before this becomes a really potentially a strong level of demand, right? So again, just keep in mind the overall context of the market. This is the high, this is the low. And we just want to understand where, if this is going to be a strong level of demand. So it needs to take out at least a level of supply, right? So this level is the first level it needs to take out. So as prices come in, react, and then go higher into this level of supply, we know that this area has been, taken out, and this demand zone would be our odds enhancer as a strong level of demand. Now, you also have as well here, as prices have made a new high, we got a level of demand right here. So as prices now take out this level of supply, because for this one to be considered a really strong level of demand, it needs to take out this level of supply, which it does, right? So we've got that level there to cut that level of supply, this level here to cut this level of supply. And as we go higher, we create a new demand zone, right? And what we have is a level of supply. Now, this level of demand doesn't take out, yes, there are some candle closes and some wicks, but it's not a clear, it doesn't clearly take out. It needs to really probably touch, or I would say touch this level of supply, or really be a strong move above, right? Not every close above a level of supply or demand is means that it takes it out, right? So for example, in this level here, you could see that we've got a candlestick close really above this level of supply, so you could pretty much say that this level is gone. Whereas here you've got this spike, you've got a spike, you got to close, but doesn't close above that level there. You see what I'm saying? It fails to really clear that level, and again, you can see the spikes, right? So it holds. And if we go a bit further, prices do come back down into this level of demand, but this isn't our strongest level of demand. And again, just looking at the area as far as the range, this would be considered from the high to the low. Let me get this. So if we was to draw the range from here to here, this range or around here is really where you would consider this to be potentially fair value, or just below fair value, right? So it's not necessarily the strongest area of to really trade. Again, the lower ends of the range are really where we want to look to buy, right? And we do come down into this area here, our first considered strong level of demand, and we get a reaction, right, all the way up here. So the second level of demand, you can see prices do come back down here, and then they react to the upside. So again, just take into account the range, highs to lows. Where are we with regards to an expensive or a cheap area? Look at where demand takes out the first level of supply. So let me grab a pen. So you've got, it's taken out that level of supply now. It's touched this level of supply. This level of supply is null and void. This now becomes the first area, right? And then we get move higher, and really that level's now, you know, closed way above here. This now becomes the level, another strong level of demand potentially as an odds enhancer. So these are really the two levels that we want to look at when it comes to supply taking out demand, or demand taking out supply.